Heading into the North American Open, markets are carrying a more cautious, mildly defensive tone with the dollar broadly firmer, U.S. equity futures softer, and oil holding elevated near multi-week highs as renewed Middle East tensions, particularly around the Strait of Hormuz and stalled U.S.-Iran developments, keeping geopolitical risk and inflation concerns in focus. The key driver remains Gulf-related supply risk, with maritime disruptions and conflict headlines supporting crude prices and lending some safe haven support to the dollar. Earlier, yen strength tied to the BOJ's hawkish leaning hold has faded somewhat amid broader defensive positioning. The euro and pound are softer at the margin, with global growth concerns and energy sensitivity overshadowing incremental policy divergence. Equities have shown notable resilience overall, with U.S. indices closing near record highs yesterday, despite the backdrop, though futures reflect some caution today as investors digest the geopolitical premium alongside a heavy corporate earnings slate. Looking ahead, focus turns to the U.S. ADP private payrolls report as a near-term read on labor market momentum and whether it reinforces caution or supports some stabilization in risk sentiment. This sits alongside ongoing big tech earnings momentum. Beyond today, attention remains squarely on dense central bank calendar, Fed and BOC tomorrow, ECB and BOE on Thursday, where markets will be assessing whether policymakers lean toward protecting growth or maintaining inflation vigilance amid the oil-driven price pressures. Over the next several sessions, the interaction between geopolitical headlines, oil price dynamics, central bank signaling, and big tech earnings outcomes should determine whether this remains a short-lived defensive repricing or evolves into a more persistent dollar-supportive environment. That's all for now.